Hi, I'm Sunny Harris, and we're going to talk about SunnyBands, Fibonacci, and Elliott today. Uh, okay. I've been trading for 43 years, but my passion still is in helping beginners. How'd that get back there? We're having technical difficulty today. I also like to help intermediate traders, and oftentimes intermediate means someone who has been trading for 2 or 3 years and is not yet profitable, but they know what they're doing. They just don't know how to turn it into money yet. And so this talk is for traders who have not yet become wildly successful. And I'll show you, I hope I have a picture in here of my live trading room equity. We're up to 60,600 and something for the 35 weeks of this year. And I'm also talking to people who have not traded much and want to learn how, and folks who want to improve their trading results. I do love to teach. I mentor and consult both. So get in contact. My phone number is on every slide in this presentation, and my website's moneymentor.com. It's on the bottom of every slide. And that's my cell phone. I answer it myself. My assistant doesn't. You talk straight to me. Well, there's a risk of loss in investing, trading, anything you do. There's a risk of loss. And hypothetical performance results, you can't rely on them. You know, it's the way to test your stuff, but it's not something you can rely on into the future. Don't trade with money you can't afford to lose. Past performance is not necessarily a predictor of future results. All investing involves risk of loss, and individual investments may vary. The examples provided here may not be representative of typical results. You'll see that especially when I show you the equity chart. When you invest, your capital is at risk and you can lose some or all of your money. Never risk more than you can afford to lose. And I should say that again. Uh, I know people that have, well, I have one client who took $25,000 into 1.2 million in 2019 or 2020, and then took it back down to negative 25,000 next year. So that happens. Never risk more than you can afford to lose. And I have the full disclosure and the details on my website. This will be posted to my appearances page on moneymentor.com. And when it's posted there, you'll be able to, it'll be a PDF and you can click on these links. I've been trading since 1981, 43 years. I trade both futures and stocks. I trade futures on a 1 and 5 minute chart and stocks on a daily chart, but I don't trade options. So I'm going to tell you a little bit about myself, but first I'm going to show you something about how I trade. No, I'm not. I'll show you that in a minute. I've been a professional trader since 1981 through all the crashes since that time, and the COVID crash, and the next one, because there will be a next one of these days. Don't know when, you never know when, but it's coming someday. I trade the S&P 500 futures contract on 1 and 5 minute charts, and I heard it's difficult to trade, but if you specialize in it and do it for 43 years, you get pretty good at it. And I do have long-term stock holdings, but to me, that means a week or more. When you trade on a 5 minute chart, a week is a long time. Oh, and I give all my stock analysis in my Sunny Side of the Street every Sunday night. So if you're interested in that, just text me SSS for Sunny Side of the Street. And I do have crypto holdings too. So we're going to look at my charts with SunnyBands and my dynamic moving averages and Fibonacci and Elliott waves. I've got some free stuff for you if you're interested. When this goes to PDF, you'll be able to click on that and sign up for the free Sunday night newsletter. And I explain there what my indicators are telling me about the markets and anything I see coming. And if you can't find it anywhere, just send me an email, sunny@moneymentor.com. And I already said that's, oh, if you sign up for membership, that's where it goes. If you sign up for free membership on my website, just go click on the membership button and you'll be right there to the forum. Oh, and I do a free podcast called The Sunny Harris Show. I interviewed Harry Boxer for that one. And I've interviewed just about everybody that's authors and system designers and famous traders from years gone past. And we've logged our 50th episode now. You could go to Spotify and just put in Sunny Harris. You'll find it. And this is what this is Sunday night, last Sunday night. So this is what Sunny Side of the Street looks like. And if you're interested in a free luncheon with me on the 21st, the way to get to that is to, where is it? Anyway, sign up for daily TAWS sessions, trade along with Sunny sessions, and you can come to the free lunch. So real quickly, I've been rated #1 trader twice. And in both cases, I was using my SunnyBands and my dynamic moving average. And there it is, right at the top. I grew up quite poor in Appalachia. And I now have 3 degrees in mathematics and 1 in photography. And I've been programming for 56 years, 43 years of it trading. I was a systems programmer for Lockheed. And I found one of the founders of a little company called ISCO, which became the world's leader in computer graphics software. Some of you may have heard of Harvard Graphics. And when I was 30 years old, I retired. And I gave my money to money managers. And they lost, because I didn't know anything about the stock market at the time. And I was a novice to all that. I knew a lot about programming and about managing people, but nothing about the stock market. So they lost $75,000 in 3 weeks. And I thought, well, I can do that poorly on my own. So I taught myself to trade and I read and read and read. And I've read 747 books about trading and investing and options and the economy and all kinds of things like that. And those of you who come to my live trading room get to see my bookshelf behind me. Sorry about that. And the first year I spent actually plotting charts. Then when I first started trading, there was no such thing as watching them on the computer. You read Investors Business Daily and you got your daily prices in the newspaper. And then I would plot them on engineering graph paper. And I could see the charts moving that way. I really learned how to read charts by doing them by hand. And I would highly recommend it to anybody. I've got 7 best-selling books now. Trading 101, Trading 102, Electronic Day Trading 101, Getting Started in Trading, TradeStation Made Easy. I did a book called Going Vegan with Linda Blair, Using Easy Language 9.x with Marie Ricciario. And now we have the 2-volume set, 1,300 pages, The Definitive Guide to TradeStation's Easy Language and OOL Programming. And I'm going to have to put a link on that so you can pick it up at Amazon. And I've written articles about technical analysis and technical trading for just about everybody. There's that. Now let's see. Here's the covers of my books. We'll give you that real quick. On my monthly magazine was right Trader's Catalog and Resource Guide. And here are the 2 new books. And there are over 300 examples in these books. And if you just register on the website, you let me know that you got the books, and I'll send you all the code for free so you don't have to type it in. And quips and quotes are fun. If you go up here to where it says quips on my web page right there, then you can read what other people say. I just post them as I get them. They're unsolicited emails. And I have a Facebook page where you can see what I think about the markets. And if you just, all you have to do is look for Sunny Harris, you'll see where I post things. And you can also subscribe to Sunny Side of the Street, Sunday night newsletter. I have customers all over the world. So don't be afraid to call me if you're in a very different time zone. We can work it out. And these are probably the most important slides in the deck. So how do you make a six-figure income? $120,000 a year is a pretty good six-figure income, and it conveniently divides. So let's divide it by months. $120,000 divided by 12 months is 10 grand a month. So who wouldn't like to make 10 grand a month? That's pretty nice. But you have to put it in terms that mean more to you. Sitting down today and saying, I'm going to make $10,000 this month doesn't really bring it to fruition. So if you divide it by 20 trading days, that gives you $500 a day. Now, some of you say $500 a day. How many contracts do you have to trade for that? I can't make 500 a day. So let's take one more look. It's only 5 trades of $100 each. And there's 5 trades in a day. In fact, in the S&P, there's usually between $1,000 and $3,500 in potential moves. That's if you're willing to go long and short both. I personally like short better. It moves faster, usually. Okay, let's take a look at some charts. This is the Dow. And what do you see there? How do you know when to buy and when to sell and when to hold and wait for the decline to stop? And there's not enough information on this chart. Come on. So that chart doesn't tell me much because it's just a bunch of candles. In fact, it kind of looks scary because it looks like it goes down as much as it goes up. You ask yourself the question, is it going down further? Is it at a bottom? And it's going to turn around now? I mean, we could be asking those questions right now with the way the Dow's doing. And they tell you buy low, sell high. What's high and what's low? When do you enter these trades? So the first thing I do,
the time is 3:00 p.m.
Sorry about that. The first thing I do with any chart is I put my little current price indicator on it. I've got a little thing that draws a dot right where the current price is. So and it, of course, it goes bouncing up and down all day long. But I like to see exactly where price is without getting distracted by candle wicks or bodies or highs and lows. It's just easy to see that way. And the thing I like to do is to make everything as easy as possible so that when I'm trading, I'm not thinking real hard about all kinds of other things. So then I add Fibonacci lines to that same chart. And I went from this low, when is that? March sometime of 23. I went from there all the way to this high. And you can see, I didn't take this into account, but it drew a Fibonacci line right here. This is 23. And then the 38's right here. And it goes across this high, 2 highs. And then the 50's down here, and it reached it there. Tried again here. Made a higher low here, and then went up. I love having Fibonacci lines on my charts. And I'm going to teach you a little bit about how we get those Fibonacci lines in a minute. The teacher in me is going to come out. Then I draw something I call attractors, and they are horizontal lines at the confluence of price. So I see price stalled right here. So I drew that horizontal line. It comes across here, stalls again, 1, 2, 3, 4 times, goes on up, comes back down, and stalls again at this same price right here. So you can, I call them attractors. This is support and resistance, depending on which way you're looking at it. It can be support or it could be resistance. And same with this attractor right here, which is drawn on these highs. And you can see over here, we stumbled right on that level again. Trend lines, I also call attractors because price tends to be attracted to that level. So it may go up, but it's going to come back down to test the level and see if it will hold. And then I add what's the most important to me, and that's my indicators. SunnyBands, the dynamic moving average histogram. And then I usually put all-time high on there. It's not on these, and all-time low, so I can tell what we're headed for. And that's what SunnyBands looks like. And we've still got the Fibonacci on there and the attractors. But now you can see SunnyBands, and the way I trade these is from top to bottom to top to bottom to top. This one only goes to the midline, and the reason for that is because the midline is flat. You can see the DMA is just moving sideways across here, and so it bounces on there. Here's another little sideways period. It goes below it, but then it bounces again, and from top to bottom. It's really fairly simple. There's only 3 sets of rules, and they're very easy to comprehend. If you go to moneymentor.com/downloads.html, you'll be able to download. There's downloadable code there. There's downloadable PDFs. There's all kinds of things you can download. Here's the histogram. This is at the bottom of the chart. This is a measure of the distance between the gold line of my DMA and the purple line. So it's measuring this distance right here. And you see it's at a peak at that level. They're pretty far apart. And they get far apart when price is trending. And they get close together when price starts going sideways. So the histogram, as I said, measures the difference between the purple and gold lines. And when it's above the 0 line, it tells me that the gold line's on top, and that's bullish. And when the bars are below the 0 line, it's telling me that purple is on top, which is one of the colors you see. Purple is on top, and that's bearish to me. When it turns green, when the purple turns green, it tells me that we're having a transition of some kind. It's going to do something different. And I know when that first green bar appears to be ready for this move. Likewise, on the gold on top, when it turns red, that tells me it's getting ready to transit to the other direction. So it's going down, and it does go down. So now I can see something. I added attractors. We had Fibonacci. Trend lines are attractors. Support and resistance are attractors. I didn't put that on there. Fibonacci lines, yeah. And Elliott waves are attractors. So let's go a little farther. Now, I'm not an Elliottician, but I am a mathematician and a programmer, so I think I can see patterns in numbers and patterns in numbers. So let's take a look at what I think I see. I have to make this apology to the true Elliotticians. So if we count the 1 wave here, and this is the 2 wave, you can see we've got a 3 wave, and it's, of course, doing all the nice Fibonacci stuff. And then this might be A, B, C, like that. Or it could be the 4th, yeah, ABC of the 4th wave. So that's where we are. And you can see how well that fits in to the whole SunnyBands and Fibonacci and Elliott wave all work together. So now I'm going to teach you what Stephen Poser said about Elliott. In an impulse move, the two non-extended waves tend to be about equal in size. So we're looking for the 1 and 5, I think. The best measurement tool for equality for all but very minor cycles is percentage, not price points. That's definitely true. If equality does not happen, a Fibonacci ratio between the two often occurs. So you might get a one wave, and then the four wave would be 61.8% of the one wave. And I used to have a spreadsheet that I had all the waves calculated on with the possible percentages that they would move. And it would do a dot matrix print with X's. That's the olden days. But an extended wave tends to be at least 1.618 times the size of the non-extended waves. This is the bottom level of Elliott wave right here. So the trick now is first you have to find the wave 1, and then you can calculate that wave 2 will be one of these extensions of wave 1 for retracements, and wave 3 will be 161 of wave 1. Wave 4, 23 or 38 of wave 3. Now these are the things I had in my spreadsheet that would estimate potential wave levels. I wonder if I could write an indicator to do that. Then wave 5 would be 61.8% of wave 1 plus wave 3. That's great formulas. Okay, so let's talk about Fibonacci a little bit. Leonardo Pisano was named Fibonacci, which means son of Bonacci, and he was an Italian mathematician born in Pisa in the year 1170. His father, I'm not even going to try to say that, worked at a trading post in Bougia, now called Béziers, a Mediterranean port in northeastern Algeria. As a young man, Fibonacci studied mathematics in Bougia, and during his extensive travels, he learned about the advantages of the Hindu-Arabic numeral system. And here's how we get the Fibonacci number. It starts with 0 and 1, and then you add together each successive number to form the third. So each number is the sum of the two prior numbers. So 0 and 1 would be 1, 1 and 1 is 2, 2 and 1 is 3, 3 and 2 is 5, etc., all the way up. And they build quite quickly. For the moving averages I keep on my charts, I use 21, which is the next Fibonacci number, and 55, also a Fibonacci number, and 233 for the three moving averages. Fibonacci numbers all the way through. The number, what we use as traders is not these numbers so much as we use the ratios between them. And I'll show you how those are formed. All right, so we've got a spreadsheet here. Starts with 0 and 1, and then it adds each successive one to form the next one. So these are the numbers. See, there's 233 right there. Oops, I clicked on it. So 233, 144, 80, 55, which is one of my moving averages, and 21. Those closely approximate, but aren't exactly the same as the 20, the 50, and the 200 that a lot of people use. I like mine to be offset so that I'm not getting all the exact same signals from them that other people are. Now we're going to talk about the ratio of number 1 to number 2, n sub 1 and n sub 2. So if you take the ratios, and here we're doing 2 to 1, 3 to 2, 4 to 3, etc., all the way down, and look what happens. 618, 0.618, all the way down after right here. At 55, they converge to 618, which is pretty interesting. So you're taking the ratio of 2 to 1, or 1 to 2, and 2 to 3, and 4 to 5, etc. So there's the 1. And there's, what did it show me now? Oh, shown that that's where the 618 starts being really solid. Now, if we do a different ratio and we look at N1 to N3, so we're looking at 1 to 3. See there? So that's the first number to it's the 1, 2, third number and the fifth number together. So we're skipping over a number and getting 1 to 3 here, which is 0.67. And it converges down in here to 0.382. See what I'm talking about? These are the Fibonacci retracements. And they're all formed from these ratios. There's one more, N1 to N4. So now we're looking at this column, and you can see these converge to 0.236. It's kind of like it's magical. So that's number 1 to number 4, and number 1 to number 4. And it would be 2 to 5, etc., to get those ratios. I think it's brilliant. Oh, and the way you get 1.618 to get an extension is the second number divided by the first number. So 2 divided by 1 is 2. 3 divided by 2 is 1.5, and it converges on 1.618. There you go. I don't know how people discover things like that. So we're going to look again at the chart. And we've got the Elliott's counted out there, and we've got the Fibonacci in it. And now you can understand what these ratios are. You see here, we've got the same thing again. 618, 50, 38.2, 23.6. Those are all the ratios you just derived on that spreadsheet. So then I've got something that I call PHW, which stands for potential hourly wage. When I first got interested in trading, I asked myself, can I make more money at a job, or can I make more money trading? If I could make more money trading, then I would like to do that. But if my hourly wage were lower than working at McDonald's, especially if I was losing, I don't think I'd be interested in that job. So, question is, can you make more by trading than working for an hourly wage? And these dots are drawn on the ideal turning points on a chart. Of course, we can't be perfect. They're off a little from time to time. But if you were able to get the top turn and the bottom turn and the top turn again over and over and over and add all that money up, then that's what I call the ideal. So I take 60% of the ideal as my goal, because that leaves me the latitude of getting in 20% late and getting out 20% late of a trend, that is. And so you can get 60% is all, or I can get 60% is all. And you see the yellow dots on here now? There's one here, one up here, another. And look, they're at the Elliott waypoints too. This is a PHW indicator that I have for TradeStation that you can put on your chart. And at the end of out here on the right, it will print out the date span for the chart, the ideal, if you could make all the dots, the PHW, which is 60% of that, and how many trades it took to do that. And then you know just at a glance, what's the PHW of this chart? That's tantamount to everything I do, is knowing how much money is available. Let's look at buy and hold. Let's buy in 2020, beginning of 2020, and sell at the end, which is now. So you could make, on the Dow, you could make $34,246 if you just buy and hold. But remember, PHW is 60% of the ideal. And on the same chart, that's $327,000. Not 34, but 327. So there's a lot more money to be made by trading than there is by buying and holding. Here's Ethereum, something completely different from the Dow Jones in theory. And this is where the yellow dots are. You can see this is a daily chart, I think. Yeah. And let's look at buy and hold versus trading on that. So buy and hold would have been $1,000 versus $23,000 trading it. And that's when I talk trading, I'm only talking one share or one contract. I trade multiple contracts, but I don't use them in my reasoning. All right, that's a daily chart, one share. And here we have Tesla. Look at the same idea again. Tesla's a very tradable stock. It's not really a good investment yet, but it's definitely tradable. And you can see that here we buy down here, we sell up here, buy back here, sell up here. It just goes back and forth, back and forth. And that's the beauty, actually, of Tesla. Now let's see what it does. Buy and hold on this one was a measly $237. Now, again, this is one share. And trading would have been over $2,000 per share. Here's the same thing. My software all works on any time frame and any symbol. So whatever market you want to trade, it'll work on there. This is, what is this, a daily chart again, I think. And you can see the Fibonacci lines on bonds. And you can see the price going up because they think interest rates are going to come down. And we have to get above that Fibonacci line or make a new high. It's not a new high. The all-time high is way back to the left on the chart. So that's what we're watching on that. We're buying top to bottom, top to bottom, top to bottom. Now, if you do a buy and hold on bonds, you make a whole $78. But trading, you make $1,300 by trading near where those yellow dots are. And the guys, I say near where the yellow dots are because you're not going to get it exactly because they don't come out real time. They're they're an historical tracking device. And I use it to measure what the PHW is, whether there's any money in there or not. So $1,300 per share. Let's look at an investor's chart on Apple. So here's Apple on a daily chart. And if you buy over here, it's going to take you years to get to the place where you're actually making some money. So when they say you buy it at 32 cents 40 years ago, you have to sit through all this stuff. So that's what it looks like to you if you're an investor and not a trader. But how did you know to buy it and hold it for 40 years? Well, this is how. I look at SunnyBands and the histogram and my PHW indicators, and that's all I do. Anybody wants to come into my live trading room tomorrow is Wednesday. Shoot me your email address and I'll send you the link so you can come to the live trading room for free tomorrow. It's at 9 o'clock in the morning Pacific time for 1 hour. This morning we made, golly, what did we make? $1,500 and something in the hour. It's a really rough morning. So my dynamic moving average was designed to let me investigate the excursions from the DMA, both favorable and adverse. And the bands, the Sunny bands part, our average true ranges away from the DMA. Well, so what's the DMA and how's that different from any other moving average? Well, they're not like Bollinger Bands. Bollinger Bands, John uses standard deviations away from a simple moving average. Standard deviations tell you where the market statistically should go. And simple moving average has the most whipsaw. But my DMA is smooth and it dances seamlessly with the market, and it does so because it's a dynamic moving average. And by that, I mean it calculates its own lengths. You know how a moving average will have simple moving average of 9, 18 means the fast moving average is length 9 and the slow moving average is length 18. So rather than have those two numbers optimized and going into this equation, it calculates its own lengths with every tick of the market. And it's a really unusual moving average. It looks kind of strange because it gets out of the way in sideways periods. And I do use average true ranges, which asks the market where it has been, and then by extension, where it might go. Here we have two simple moving averages on a chart. You can see the crossovers. No, is that the one? I think this is the chart that I have that does the lines for you. Yeah, there we go. So we have a crossover of the moving averages right here. And notice what's next. Another crossover right here. Why didn't that draw an arrow? And we have another crossover here and another crossover here and another crossover here. All of those are whipsaw. All those will cause you to lose money. Yes, you may make money on this trend from here to here, or even this dangerous one from here to here, but then you're going to get hit with the whipsaw and you give all the money back. So those are the shorts, or no, the crossovers, sorry. Let's look at my dynamic moving average and the same simple moving average on a chart. And you can see how mine doesn't cross over back and forth. They stay in this position until they turn to the next position, which is long. Gold on top means long. Gold still on top. Gold still on top. So until it gets flat, when the DMA goes flat, you get out and you take your profits. But you were in this entire run. And then it has, right here, it has a short signal. So you write that down that way. So notice the difference. Well, the dotted lines now are the simple moving average. Crossover, crossover, crossover. And the purple and gold are my dynamic moving averages. And you can see gold's on top. It's bullish, but the DMA is flat, which tells me stay out of the way. And it's unique because one reason, nobody else has it. This is not like anybody else's moving average. And I've seen others try. Perry Kaufman has tried, and John Ehlers has tried. I've seen articles in Stocks and Commodities magazine where they've tried, and I've programmed them all just to see how they look, and no one's close yet. I invented it. Well, it was finished 37 years ago, and I haven't done anything to it in the meantime. I've added a couple upgrades and enhancements, but I've never changed the parameters and I've never changed the mathematics. And I don't optimize it. So in 37 years, it hasn't been optimized. It calculates its own lengths dynamically. That's the whole thing. I first started with tables and tried to get tables of different market conditions and tried to measure the conditions. And I finally figured that the best way to let it automatically adjust itself. That's average true ranges. And here are the basic SunnyBands rules. When the market's going up on, and I use blue rather than green because SunnyBands are green and it gets too congested looking. So up candles are blue to me. When we've been going up on blue candles and we get above the upper outer sunny band, and they turn red and dips below the upper outer band, I go short. And likewise, when the market's going down on red candles and gets below the lower outer sunny band and turns blue and pops up above the lower outer band, then I go long. That's the basis of it right there. Now, there are some more complex rules as well, and you'll see me use them, and I talk about them in my live trading room. I tell you exactly what I'm doing, when I'm getting ready to take a trade, what I'm looking at, how much, and you see my charts the whole time. So here's long and short trades on Apple. Just draw arrows? No. So this is a chart of traders long and short trades at the yellow dots you'll see every time. And a little bit differently, we're going to look at a swing traders chart. So now we've got, I think this is 15-minute. Red and blue candles for the day session. Green and magenta candles for the night session. That makes my life a whole lot easier when I can see whether we're in the day session or the night session just by looking at my chart. I don't have to come down on the axis and figure out what time it is. As I said, I like to have everything really obvious, so I'm not thinking about those kind of things while I'm trading. I can't answer that phone call. Somebody's calling from the presentation. And here's the day traders chart. This is a 3-minute chart. And you see this is all one session because they're red and blue. And it can get pretty wild on the E-mini when it's down at that level. I usually trade a 1 and a 5. So I put a 3 up as a compromise. And you can see again, yellow dots, yellow dots. And on this one, you can see over at the right, it's kind of written over, but it says buy and hold equals ideal equals PHW equals date span. So you can see, now this is not an active chart, so I can't pull it over for you, but you can pull that over and see what all the writing says. Somebody said, can we see the SPY on the 1 minute? And this is a presentation. It's not I don't have my charts. All we have is the slides for the presentation. But if you want to give me a call, I will get on Zoom together and I'll show it to you. So looking at those 3 charts, the investor made $168 a share. Trader made $2.99 per share. And the day trader made $610 per share. If you'd started, on the other hand, with 100 shares, $1,600, $29,000, 16,000, sorry, 29,000, and the day trader could have made 61,000. Now you can see those results magnified. It makes a lot of difference. Of course, everything I am showing you here is back tested and therefore hypothetical. So in the same amount of time, starting at 47 cents in 1981, and assuming a current price of 156, the investor made 399%. Trader made 635%. And the day trader made 1,200, almost 1,300%. Is this web-based or do I have to download the software? This is my presentation. It's PowerPoint. But if you want to download the software, I'm using TradeStation for my charting. So you can download TradeStation. And then I can give you a free trial of my indicators. And that's, you do download something and I get on Zoom with you. And I give you 2 Zoom sessions, one where we install it and I introduce you to the concepts. And the next one is where we look at it together in the live markets. So is it possible to make that kind of money? Well, yes and no. You can't catch all the moves. You're never going to. According to my research, you can only get 60% of each move. And that's what's reflected in these numbers. But the thing I don't like about being an investor is you've got to sit through long periods of scary negative markets. Like, what are we doing right now? You know, who wants to be long in this? And a trader can go short. Let's look again at the Dow because we're all familiar with it and it's reported daily on the news and we get to the numbers. So if they report the Dow down 300 points, We know what that means. Today it's down 92 points. We know what that means. That's not so terrible. Now this was written a few months ago, but it was down 10% more from its high at that time. And then it lost 964. Well, since then we've had a 1200 point down day. So it's been quite volatile. So here's the Dow with SunnyBands, also with the 3 moving averages. I like to watch the moving averages, and this is one that I wrote that it says greater than 200. So I know automatically with this color matching that color that this is the 200 moving average and price is greater than that. And then written under all this stuff here is the 21 and the 55 moving average. I think I could add another enhancement to that and put the price at that level. That would be nice. And this is the Dow on a weekly chart. And you can see long extended period of basically sideways from here to here. And then we've got a run up there on the weekly chart. Here we have, and this looks like the crash of 2020. Is that? Yeah, that's probably right. And let's look at the Dow a different way by looking at Vantage Point software. It's artificial intelligence predictive software that gives you a perspective of where things could end up or down tomorrow. And I have it. And I post it daily on my Money Mentor site. If you scroll down, if you go to moneymentor.com and you scroll down a little ways, you'll see, and I do it after 4 o'clock every day, California time. So you can see what the prediction is for tomorrow. SunnyBands works on multi-charts, TradeStation, MetaStock, and NinjaTrader, not Thinkorswim. What does P&L all over the place mean? I'm not sure what that question is. And if you click on this, you can get a little free training session to get started with Vantage Point. And there's yesterday's chart for Vantage Point. They were predicting a day that was quite broad, big range, top to bottom. And where did it go yesterday? It went up. So it went up to this level yesterday. And I'll be posting a new one of these around 4 o'clock today. More about the Dow. So let's look at the standard moving averages again. They're quoted in Barron's, Investors Business Daily, Wall Street Journal, everywhere. They use the 200, the 20, the 50, and the 200. Sorry. I use the 21 day, the 55 day, and the 233 day. And I like that because they're all Fibonacci numbers. For some reason, the market seems to play with those numbers. Here are the indicator I call 3 moving averages. No, moving average 3 lines. And you can see greater than the 21, greater than the 55, and greater than the 233. That makes life simple for me. Now, what would be nice if I would put the price right to the right of that. That's the next update. And here they are with the DMA histogram and the Fibonacci lines back on it. And this is the weekly chart of the Dow. Now let me show you how I choose stocks. I don't short stocks. I don't like borrowing them in a margin account and having to sell things that are easily borrowed. So when I get a short signal on my SunnyBands, I just exit the trade. And then I buy and hold after a buy signal. When a sell signal appears, then it's time to take profits. So this next chart tells me which stocks are above all 3 moving averages. Okay, so it's putting these 3 in there and looking to see how many stocks are above there. It also tells me whether my dynamic moving average is bullish or bearish and what the potential profit is. It's a busy chart, but I'm going to show you. So the first thing I look at is the 3 moving averages. I'm looking for stocks that are above all 3. And there's what it looks like. I used to put this in my Sunny Side of the Street newsletter, but it's just laborious and hard to read on a page. So I'm putting it now in my bonus charts. So anybody that subscribes to Sunny Side of the Street gets access to this and my boxes and boxes chart and my scan and something else. $19.95 a month for 4 issues. Oh, let me go back to that a second. Now I know that's hard to read, but you see the SJH, my initials, underscore R means it's a radar screen. Moving average 3 lines. When it's red, it's not true. When it's green, it means it is true. So this particular green one, which looks like Adobe, is above all 3 moving averages. That's bullish. More all green ones down here. That's all bullish. And then if I go over to this is my initials radar screen dynamic moving average, you can see here, this says purple's on top and was moving down and is still moving down. That's what that little slash means. This one is bullish. It was that going down. Now it's going up. So it's red on the purple and red part of the DMA histogram. So you can read the histogram values real quickly in this column, these 2 columns. And the yellow column on the right is the PHW total. So you can see how much money is possible in every one of these stocks. If you double click on PHW, it'll sort it from low to high and double click again and sort it from high to low, and you can tell which makes the most money. That's what I trade, whatever makes the most money. I have a very simple philosophy about trading the markets. We're only one reason to do it, and that's to make money. So we find stocks showing all true sells, and these are bullish. And we look at the scanner results, and I'm going to show you that, I think. Yeah. So on yesterday's scan, there were 96 stocks that were above all 3 moving averages. So right here, your symbols. That's the other thing that gets posted in the bonus charts for Sunny Side of the Street. And when this gets, well, a couple weeks ago, we were over 250 that were bullish, and now we're down to 96 that are bullish. And I've seen it go as low as 40 over the years. And my website's moneymentor.com. That's what it looks like. You'll see my phone numbers right at the top, along with my email address. And thing to remember is that education is not expensive. Lack of education is. So invest in your education and don't make it all through experiencing losses. That's definitely an education, but it's not the kind we want. So here are products that I have available. I've programmed them all for use in my own trading. I don't sell anything that I don't use in my own trading. And I do sell everything that I use in my own trading. I don't hold anything back. I'll tell you exactly how I use them. I show you in the live trading room exactly how I use them. And I don't keep any secrets. So if you want to go to moneymentor.com order form, you can look through all my indicators and see what I have there. You can see charts of everything. And of course, you can order there if you're interested. Yeah, I don't hold anything back. Oh, yes, and I train you to use them for free. So that's what the Zoom calls are about, me training you how to do it. Please show the last slide that showed the number of stocks that are profitable. It's not profitable. It's the number of stocks that are above all 3 moving averages. Let me go back a few more. There. So there are 96 stocks, and I think this is the S&P. Only 96 stocks that are above all 3 moving averages. Okay, let's go back. Forward. You're welcome. So these are the things that I offer: indicators, software, education and consulting. I will do easy language programming for you if you're interested. I love to do mentoring. Uh, I love seeing people go. Well, I have one under my quips and quotes on my webpage. I have one quip that says, I started from a, what did she say? I've started from a cringeworthy place. This one student of mine bought 10 hours of mentoring time, and we got her from not even knowing what a bar chart was to now trading real money, and she's doing quite well. So it's like I said, education is not expensive. I have a complete bookstore on my website. I'll link to Amazon books, and I get 50 cents every time you buy a book. I have a distance learning course called Solving the Puzzle, and I offer the indicators I use myself in my own trading. That's the thing, own trading. And one free Sunday night newsletter, Sunny Side of the Street. Now, I do have a special offer today. If you order before the end of this coming week, you can get 20% off of all my indicators and my mentoring time. Now, I don't ever give a discount on my mentoring time, but until the end of this week, you got it. And I have a special new 3-month payment plan. If you think SunnyBands are too expensive, you can pay for it over 3 months now in 3 equal payments, and that makes trading easier. And if you want a 7-day free trial on any of those platforms that I mentioned, okay, and they are again TradeStation, Multicharts, MetaStock, and NinjaTrader. So just text me 760-908-3070, and I'll take. If you want a trial, text me free. If you want Sunny Side of the Street, text me SSS. And if you want to join in one of the Wednesday live trading rooms for free, then text me TAWS. Let me put this here. TAWS stands for Trade Along with Sunny. So text me TAWS if you want that. I've got a question here that I don't understand. Profit and loss volatility from entering the futures market while holding overnight and for days or weeks. I don't understand what you mean by that. The ES is volatile. I don't hold overnight ever. I used to many years ago when there was no overnight session, but now I don't. Okay, let's keep going. Are there any questions that I haven't gotten to, or any questions about the presentation or my software or any of that? I've got one email address. You have the knowledge about trading, but not as necessarily equal to success. Give me a call. We'll talk. I'll give you my best advice. Costs are, I don't know how long in time the delay is for the yellow dots because it's not based on time. It's based on a 0.2% retracement. So how long does it take to get a 0.2% retracement? I don't know. It just has to have that much of a turn before it recognizes it as a turn. You're certainly welcome. Margins on futures are ridiculous, so they're no holding overnight. Yeah, the ES margin's $1,518 intraday, and 15,000 overnight. So that's That's a good reason not to hold overnight. But I don't like to because the overnight market is quite volatile. And I have no idea what's going to happen the next morning. Thank you. Okay, any more questions? No such thing as a stupid question. If you have it, someone else will too. Thank you, David, and Timing Research, and Anka. I always enjoy talking with you. And thanks for your attendance, audience. I love the visit, so I'm serious. Give me a call. Here's my information again. There we go. Thank you, everybody. So email me, give me a call. Thank you, David.